is out, and now I'm starting all over again. So I apologize for that for everybody trying to find the show. I'm going to babble here for a couple of minutes, and hopefully a few people can find it today. I apologize for that, guys. I don't know exactly what happened. Everything was looking fine. We were rolling, and then it wasn't fine. So I don't know. Um, just lucky, I guess, right? All right. Let's talk about markets today. Do you guys see these markets, guys? The craziest times I've ever seen in my life. The market just keeps, the trend is obviously up. Business is strong, earnings are decent. So what's happening is the stock market wants to be in a bull. But traders, definitely very data driven right now, spooked by the slightest hint of anything, guys. Anything. So let's look at what happened today. So the market still trying to digest Friday's jobs report, which was, as we all know, was a giant blowout, beating the consensus by more than 100,000 jobs. Now we'll see what happens when it's time to revise that. Because lately, when we get these gigantic job numbers, the revisions tend to be down rather than up. But the last two jobs reports, the last 2 months for September or for July and August were both revised higher, which is a little bit different. Now we're kind of going, well, okay, strange. So the markets today, not feeling real good about the direction rate cuts are going to go. With the strong jobs report now, the GDP numbers looking surprisingly high, no big layoffs coming, the stock market at record highs and companies earning money. The data we're getting, again, this is the data we're getting, okay, shows the economy is decent. So the markets, in their lust, I guess is the right word for rate cuts, not liking any news that could suggest that rates won't get cut. So what we had here is the stock market reacting negatively. The Dow falls 398 points today, 41,954. The NASDAQ falls 213 points, 17,923. The S&P falls 55 points, 5,695. So what you have there is across the board, stocks selling off. Crazy, guys. I mean, this market now trying to figure out what can't be figured. What I talked about, bond yields surprisingly rising. We're going to talk about that in a second. This war with Iran and Israel that won't go away, and spiking of oil prices. The uncertainty about Fed rate cuts. Where are we going to go now? The economy looks a little stronger than we thought. We may not need rate cuts to sustain it or stimulate it. The stim could actually be inflationary. The election coming up, and on and on. There's just so many things for the market to focus on. And seems to me like they're focusing on everything that's important, which is, are companies earning money? Which they are. So the bond market today also unwinding a lot of trades for people who were betting on big rate cuts coming. So the 10-year spikes up 4 basis points, now at 4.02. So the 10-year right back over 4%. The 2-year spikes up 6 basis points, now at 3.99%. So it's actually 3.997%. So basically right at 4%. So you can see now, we had the 2-year higher than the 10, called an inversion, right? Then it fixed itself, but it was very narrow. Then it was widening, and now 3 basis points, it looks like it could invert again. This is all a reaction to maybe the Fed's not going to cut rates as much as we thought. So the bond rates spiking, no relief for the poor bond market, which is really disappointing, but it is what it is, guys. These markets, man, can't figure it out. So it's going to be susceptible to day-to-day volatility where the data they get that day, or even yesterday's data in today's case, drives these markets one way or the other. The dollar today was basically flat, up just 1 basis point, but still sitting at a very strong 102.49. Also, I guess that would be a reflection in Forex of the dollar is probably not going to tank as much as they thought because rate cuts are not going to be as deep as they thought. So that would explain that, I think. Precious metals today, the strong dollar getting to precious metals a little bit. Gold falls $10.80, $2,643.50 for an ounce of gold. Silver falls 51 cents, $31.65. Thank you. I'm glad Dave. Sorry, guys. Dave, Wolf, you guys were on. Smoke was on earlier, too. Sorry I had this computer glitch, guys, and here we are. Anyway, gold and silver taking a little bit of a hit today. Still at very good prices. Very pleased to see silver not in any way nearing the $30 support number. Glad to see silver consolidating with some strength above $30. Oil today. Thank you, Iran and Israel. Oil today spikes up again, $2.85, $77.23 for a barrel of West Texas Intermediate. I think Brent actually hit $80 per barrel today. It's still not much higher, even with these big spikes we've seen, still not much higher than where we expect oil to be. Now, the problem we're having with this Iran-Israel thing is it's Iran's turn. Israel went and blew up that guy in Tehran. The Israelis or the Iranians fired a whole bunch of missiles at Iran, which I guess a few got through, but most of them were shot down between Israel's defense system and us and a few other people helping them out. So now it's Israel's turn. What are they going to do back to Iran? This tit for tat thing going back and forth, right? So now it's Israel's turn, and the market's now starting to worry that Iran or Israel might actually go after them with some real force. Not just, so it looks like the fear, I guess, is that this will change from this proxy war, which we have going right now with, Israel fighting Hezbollah, Hamas, and the Houthis, and all these different groups that are all sponsored by the Iranians. Now it looks like Israel may just go bypassing all the proxies and go right at Iran itself. And that's why you're seeing these big spikes in oil. Well, I don't know, man. I don't know if that really would be good strategy for the Israelis. I know that they would like to neuter the possibility of Iran getting nuclear weapons. So I'm sure they would love to get their Air Force in there and bomb their nuclear facilities. I'm just not so sure how that would work in the wider world. Iran is not as isolated as it once was. It has some very powerful friends in the Chinese and in the Russians and the Indians and of course, North Koreans and all their friends in the axis of knuckleheadedness. But it's going to be fascinating to see. I don't think we're going to have to wait much longer. We'll see what Israel does. And of course, that will tell us whether we're going to get another gigantic spike in prices or prices will settle back down and it'll just go back to what it typically is between these two countries. Bitcoin today rallies up $461. Now it's $63,063. Bitcoin holding its support number very well, just like silver. Nice to see Bitcoin rallying when the markets are down because Bitcoin has been kind of following the markets lately. So good to see it operating a little bit independently, right? All right, so let's talk about, like we do every Monday, the data we're going to get this week. Today we got consumer credit numbers. Now, these were interesting. Consumer credit, they were expecting it to be up 12 billion or 1.2 billion. The deal, here's what happened. Consumer credit did rise 0.2% month over month. The interesting thing about the consumer credit, well, 2.0%. The interesting thing about the consumer credit number, though, is revolving consumer debt actually fell 1.3%. Now, revolving debt is credit cards, guys. Revolving debt is, your stored charge cards, your Visa, MasterCard, Amex, and all the rest. The only reason there was an increase, auto loans and student loans. Auto loans and student loans drove the index higher. Revolving debt actually fell. So holy crap, man, are consumers actually going to be a little bit smarter about how they use their credit cards? I'd like to see that happen 2 months in a row first. But anyway, so that's Monday's data. Tomorrow we'll get trade deficit data, quiet day. Wednesday we'll get Fed minutes, which will be interesting. We'll dig into those a little bit. We'll also get mortgage bankers numbers. I'm sure that's going to be wonderful news for real estate. And we'll get wholesale inventories, which are expected to be higher. Thursday is the big one, guys. Thursday we're going to get CPI. CPI, that's the big data this week. Expected to come in at 2.3% top line. That's down from 2.5 last month. Here's the problem I see. They're expecting core to come in 3.2. So core significantly higher than the top line. That's a little bit odd. Also on Thursday, we're going to get jobless claims. They're expected to come in at 230,000 this week, up from 225 last week. And on Friday, we'll close the week out with the PPI numbers, which are, in my mind, very important because they give us an idea of where inflation is going in the future. These wholesale inflation tends to get priced in retail. So when you see PPI going up, CPI going to follow. So that'll be important on Friday. Also, we will get the University of Michigan Consumer Index, which always has just a ton of information about how consumers are feeling about the economy, where the economy, they believe it's going, interest rates, and everything else. So big week of data this week. Mostly, though, of course, nothing Monday and Tuesday, or very little. Although we did get big news today. I think that on a normal day, seeing revolving credit actually decline by consumers would be considered good news. But with this Israel-Iranian thing going on, the market can't focus. All right. So we know where we're at today. We know where we're going to go for the rest of this week, at least as far as the data goes. So let's talk about this for a second, guys. So what are the markets telling us right now? I think the most important thing they're telling us, guys, is the markets have no idea what's next. The markets are very happy with, in most cases, the results they're seeing. S&P 500 companies on earnings. The vast majority are beating their earnings estimates. The misses are being punished pretty severely. The markets are telling us that earnings are good or solid. Now, rising rates reflect an economy that's strong. Okay, so the market's pricing in these rate increases. That's telling us the market, obviously, the markets and the economy is stronger than the markets thought. So they're unwinding a lot of these cuts, right? Now, the no landing scenario. We got the soft landing and the hard landing, right? We avoid a recession and a soft landing. We get a recession and a hard landing. This no landing thing where the economy just keeps going right now, I think is starting to get, in my mind, looks like the clearest way. The bottom line, guys, is we've had this phantom, the word, I love this word. It's a phantom recession, right? We've been talking about this recession for years. It just hasn't come. It just hasn't happened. Now, there's a lot of negative things to not like about this economy. But even the most negative can't say we're in recession, or that there's really any sign right this minute that recession is imminent. So, what does that tell us we should do? Number one, we should still continue to be cautious, because if we've managed to ride out this storm for this long, no recession, the numbers catch up sooner or later, right? So we want to be cautious, but we want to not be in this totally negative frame of mind where we miss opportunities because we feel like we're in recession now. Our recession is imminent tomorrow. It just isn't, man. It just isn't. So it's very fascinating stuff here. Now, the wild card on all of this is this inflation number. Right now, the Fed's focused on jobs. The Fed's focused on keeping the economy going strong. As long as we can keep the Fed's focus there, the economy will be strong. But inflation is the wild card, because if we get a spike in inflation, which would not be a surprise with the economy doing better than they thought, okay? If we get a spike in inflation, the Fed quickly turn its focus from the jobs and the economy right back to the inflation numbers. And we could actually see rate hikes. Now, a big spike could change everything quickly. Now, this Phantom Recession deal, I was reading an interesting article. Ed Yardeni, who's a pretty solid research guy, says that the Phantom Recession is done. We can stop talking about it now. And he believes that there will be no more rate cuts this year. Well, that's a pretty big move. Now, this is a guy I respect. He's had some good calls in the past. This is a guy who's going against 93% market consensus that says we're going to get a quarter-point cut next month. I got to say, guys, I've had my doubts about all these rate cuts for a while now. Tell me this. If you're an economist, and most of the guys watching this show know quite a bit about, economics, surprisingly, right? I learn as much watching you guys as you guys are learning from me. But what's interesting is, if you're the Federal Reserve Chair, if you're Powell, are you cutting rates into an economy that's growing? Does that make good monetary policy sense? I'm telling you, it doesn't. And that's why it's unlikely it's going to happen. Maybe they feel like they need to get closer to neutral. But they have no idea what neutral is. So it's just, guys, craziest times ever. A couple quick hitters. Is Michelle Bowman, the Fed chair, the only one who voted no on that half-point cut, looking smarter and smarter every day? I think she is. Obviously, she was right. That half point was way more than they needed. And obviously, it shook the markets up and made everybody happy. Giddy, the stock market took off like crazy. But as far as monetary policy goes, I got to say, she nailed it, man. Quarter point made sense. What did she say the reason for that was? The economy was too strong for cuts, and inflation had not hit the target. Guess what? Still true, both. So good for Miss Bowman. She was the only no vote on the half-point cut. That was the first no vote at a FOMAC meeting on a rate cut since 2005. I thought that was interesting. Hurricane, guys, you saw what's happening in the Gulf of Mexico here. Looks like Florida's about to get smashed with another hurricane. All my viewers that are in Florida, guys, please take this very, very seriously, man. This one looks like it's growing into be a Category 5. It's probably going to go all the way across the entire state from the Gulf to the Atlantic like Andrew did the other way. They said the flooding is going to be bad, guys. Don't be casual about this. Do what you need to do to protect yourselves, man. This one's going to be gnarly. Here's another thing to consider. We already saw all the debris from the last hurricane. What was it, 2 weeks ago? People lining the streets. I saw pictures of this. This is what they're really concerned about with this one. They're all the people dumping their, getting this trash out because it's all debris left over. People cleaning up, digging out. Well, guess what? Now you're going to have 160 mile an hour winds, 140 mile an hour winds coming on shore, and all this debris lying around. It's going to be crazy. Stuff's going to be flying everywhere. Everybody be very, very cautious. All right. Here's another thing about hurricanes. The vast majority of people that got smashed in Helene have no flood insurance, guys. Their houses destroyed, damaged by flood, no insurance. Flood insurance is typically not part of a homeowner's policy. Maybe a small one, your shower leaks or something like that. But catastrophic, act of God flood, no, not covered. So these thousands of people, these entire towns that got wiped away by these floods, going to be wondering how in the hell they're going to rebuild. I got to see what the government's going to do in response to this. All right, guys, I've been babbling on way too long. I apologize for the glitch. David Marley, you guys are in Florida, I know. Please be very cautious, man. I don't know exactly where in Florida you guys are at, but it looks like the whole West Coast from friggin' Fort Myers all the way north of Tampa's under hurricane watch, so be really careful. Anyway, guys, that's it for the day. Please hit the thumbs up on your way out. Gives us a chance to get more views on the video. I apologize for the glitch. I apologize for the confusion with getting the video started. We'll try to do better tomorrow, guys. Anyway, everybody have a great evening. It's Monday evening. Go watch some football. Have a cold one. Relax. Back to the grind tomorrow. We'll be here to bring you guys the news you need. Until then, everybody, take care. Thanks.